What up, what up, what up, what up, what up, what up, what up? Crypto Warriors, it's Sergeant Crypto back at it again. Today is Wednesday, March 4th, 2020. Breaking news. The Supreme Court of India has struck off the Reserve Bank of India's RBI banking ban against crypto. We look forward to supporting our partners at WiserX, India, and empowering 3 billion people with the freedom of money. Hashtag India welcomes crypto. This is coming from Binance. Give them a follow on Twitter if you're not, and give me a follow as well. As links in the description below, of course. But let's have a quick read. This is Bloomberg Crypto. India's Supreme Court struck down a central bank directive that effectively outlawed virtual currencies in Asia's third largest economy. A 3-judge bench headed by Justice Nariman agreed. I wasn't even going to try to pronounce that first name. I'm sorry. With petitions by cryptocurrency exchanges, startups, and industry bodies that had challenged the Reserve Bank of India's April 2018 decision to ban banks from offering any services to support digital currencies. The ruling is a boost for virtual currency investors and businesses in India, where a skeptical federal government is mulling stringent regulations. The Supreme Court is separately hearing another case in which it will decide on regulations for digital currencies, and Wednesday's judgment weakens the case for strict norms. Meanwhile, the Indian central bank has been exploring the creation of a sovereign-backed digital currency, even as it escalated its crackdown on private instruments like Bitcoin, citing the potential for money laundering and other illegal activities. Well, we all know that the narrative of Bitcoin and cryptos being used for illegal activities such as money laundering is a false narrative, and they're just trying to protect their six and come up with their own digital currency. In the end, that's all that they really care about, is just trying to do banking the same in this new digital realm of cryptocurrencies. All right, so they're going to try to come out with, if they don't already have their own crypto, it's not even going to be a crypto. I have to stop saying that. Their own digital currency backed by the Indian rupee or something like that. All right, but breaking news, like I said, this just happened 55 minutes ago. It is 1:30 in the a.m. here Wednesday in New York City. So breaking news. All right, let's get into it. Next, we have coming out of CNN. So the Dow drops nearly 800 points after Fed's surprising news about the economy. All right. Stocks went on a wild ride Tuesday after the Federal Reserve slashed interest rates by a half point to help insulate the U.S. economy from the global coronavirus outbreak. Now, let me just say that the system has been cracking. We've been on this bull run now for more than 10 years. Since the last financial crisis back in 08, 09, and we've just been on a tear in the traditional markets. Everything is up. Traditionally, if you look in the at equities or stocks, right, what happens is it corrects itself every 8 to 10 years or so on average, and we've just been on an uphill climb ever since 2009, since the bottom of the market the last time, and it's just been constant growth because of the quote-unquote quantitative easing, the print, which is basically printing money, or in this case, releasing more digits and numbers on a computer screen. And we've just been on a tear, and the world has been, on this euphoria of this growth, which has been stimulated by central banks around the world. The Dow swung nearly 1,400 points from its low to its high point over the course of Tuesday. At one point, the index was down 997 points. It finished down 786 points, or 2.9%, retracting Monday's buoyant rally, during which it recorded the best point gain in history. So all of last week, everything crashed pretty much, and it pretty much recovered on Monday, all the gains that was gone, and now it's taken back some of those gains. And although it's only went down 3% essentially, that's nothing in crypto. We could drop 10, 20, even sometimes 30%. Like it doesn't matter, so this drop of 3% in the regular stock market, it's a lot for those guys. The broader S&P closed 2.8% lower on that same day, and the Nasdaq is down nearly 3% lower. All right, stocks slipped as the 10-year U.S. Treasury yield fell below 1% for the first time ever. The yield was back above 1% at the closing bell. So, as much as they want to, I'm throwing up air quotes here, help the system, right, by printing more money and dropping rates, essentially giving away the money for free, it can't hold up the system. It can't hold it up. They're trying their best to hold everything up. They even had this meeting with the G7, the top 7 economies of the world, and they all pretty much agree on this emergency help from the Fed. All right, the surprise move by the Fed followed a wild rally Monday in which the Dow recorded its highest point gain in history. Stocks had soared because investors came to expect the Fed would cut rates. So there you have it. Monday's rise was because everyone expected the Fed to cut rates. They expected Big Daddy Federal Reserve, a private bank, to cut rates and help out in the markets. Finance officials from the world's 7 largest advanced economies, known as the G7, failed to calm investors' nerves about the outbreak earlier Tuesday, as the group said it would not coordinate interest rate cuts and made no commitment to fiscal stimulus to stave off the economic fallout. Now, they claim that they weren't going to help, but then they actually did help. And they're trying to blame it on the coronavirus. It's not the coronavirus's fault. The markets around the world have just been pumping since 2009. It's due for correction. A correction is healthy. We need a correction in the market. This way, things can, the weak companies, the weak banks that need help in the repo market, where the Federal Reserve have been printing money, which was an emergency printing of money back in September that was supposed to only happen for 2 weeks, and it's been continuous since September, and now we're in March of 2020. So since September of 2019, they've been printing money nonstop. So over $1 trillion have been pumped into the markets. This is why stocks are so inflated. This is why the prices of stocks are so high, because these people have free money. So, instead of investing in their own companies, instead of investing in, research and development, they're just buying assets. We have overinflated real estate prices. We have overinflated stock prices. So where do they expect, these people to put their money? They're not going to, do what they're supposed to do and reinvest in the economy. They're going to do they're going to do what is best for their own wallet. So they're going to invest in real assets. They're going to take that fake money that's being printed and reinvest it in real assets, i.e. stocks and real estate. Okay? The biggest thing that's being missed today is that the Fed has to cut to provide headroom for the global economy, particularly in places like Hong Kong, where their exchange rates are pegged to the US dollar. This is coming from Jay Hatfield, portfolio manager. That's a direct quote from him. They're trying to blame everything on the coronavirus. Oh, we need to, you know, help the economies of the world because China is basically the supply chain for the whole world. All right, it's keeping the inventory for the whole world for everything, and we need to boost the economy. So we need to print more money. Like, these things will happen. These things should happen, and that's how a healthy economy moves forward. The weak banks, the weak companies that can't, provide for themselves or can't survive during an economic downturn, survival of the fittest. Either get bought out or they close down, whatever the case is. Yes, some people may lose some jobs here and there, but people will recover. But mostly, this money printing is doing is just helping the wealth is really separating that gap between the wealthy and the not non-wealthy, the rich and the poor. That's all that money printing is doing. Coming out of Cointelegraph, Bank of England warns crypto adoption may impact credit creation. So John Concliffe, the Deputy Governor for Financial Stability of the United Kingdom's central bank, the Bank of England, BOE, has warned that the emergence of a cryptocurrency economy may weaken or eliminate bank credit issuance. May weaken or eliminate bank credit issuance. What does that mean? Basically, what he's saying is because the banks create debt and they don't pay an interest rate anymore, and with the advent of cryptocurrencies, especially stablecoins, and people can get a great return from stablecoins and different cryptos in DeFi platforms, the banks are pretty much done. All right, no golf clap for that. Yes, it's about time you guys wake up to that. All right, with DeFi platforms, banks aren't needed anymore. You have things like Celsius and BlockFi where you're able to get, in some cases, 10% return annually on your investment for saving. All right. So on February 28, Concliffe predicted that the integration of stablecoins on social media platforms could lead to people putting much of their money currently held with banks into stablecoin wallets. Warning, in such a world, and this is the direct quote from him, in such a world, and depending how and whether stablecoins were backed with other financial assets, the supply of credit to the real economy through the banking system could become weaker or indeed disappear. That would be a change with profound economic consequences. Basically, again, it's what I've stated before. All it means is the time for the banks are coming to an end. At least banks, the way how we know banks to exist today, with the advent of stablecoins, with DeFi platforms where someone can put $100 in some kind of stablecoin, USD, BUSD, Tether, whatever the case is, and actually get a rate of return on their money and not worry about fractional reserve lending where the bank is only using your money to create more debt. That's how the banks work. Look up the video with Ray Dalio and the way how the economic system works. It's a great video. I'll link that video in the description below. Yeah, that's it. What do you guys think, man? With the Bank of England, a governor for the Bank of England warning about stablecoins and the fact that cryptocurrencies will put an end to the way banks do business today, and the Fed cutting rates didn't help the markets much. The cracks, it's bursting. The bubble is bursting. They're trying to blame everything on coronavirus this, coronavirus that. It's not coronavirus, man. It's just been 10 years of a continuous run up, and we need that correction. It's healthy. It's healthy for the economy. And also, great news for Bitcoin and crypto, with the Supreme Court in India striking down the RBI's ban on crypto. How many people is in India? I think it's like almost 2 billion people in India are going to now have the opportunity to be a part of a DeFi world, of part of a crypto world. That's more people using crypto, starting to save with crypto, starting to use Bitcoin. Great for adoption, in my opinion. Let's discuss it in the comment section below. Smash with the likes. If you're listening to this on iTunes or as a podcast, the audio podcast, leave a review, a 5-star review, and yeah, let's talk about it in the comment section below. It's your boy Sergeant Crypto, and I'm out. Peace.